right, silver's been climbing, but for those of you wondering whether it still has room to run, well, some analysts are saying we haven't even left the launch pad yet. According to Jordan Roy Byrne, technical analyst and author of Gold and Silver, the greatest bull market has begun. Silver could surge to $100 over the next 12 to 15 months, but only if it breaks one key level first. That level, $50 per ounce. And according to Roy Byrne, breaking above that would represent the most significant breakout in capital markets since 1971, when gold was officially decoupled from the dollar. In fact, he compares it to gold's historic breakout above $44 back then and believes silver's 45-year base makes this setup nearly as big. Now that $50 ceiling isn't just psychological, it's technical. Roy Byrne points to major resistance levels at $35 and $37, but says that once silver clears those, the path to $50 is relatively open, and beyond that, well, the sky's the limit. After $50, he sees little resistance on the charts, and historically, when silver breaks major bases like this, it doesn't just inch up, it rockets. And by the way, if you're someone who thinks this is the kind of window that doesn't open often, well, you're not wrong. That's why some folks are looking for a safer way to hold physical silver. And if that's you, you might want to check out the free gold and silver kit in the description. Not only is it educational, but it could help you qualify for up to a 10% instant match in bonus silver and a free Ronald Reagan half-ounce silver coin. See if you qualify before this current wave crests. Supplies are limited and it's first come, first served. So why now, why silver, and what makes this different from previous rallies? Well, for starters, Roy Byrne says the setup is similar to 1972, 2002, and even 1930, periods when credit markets began to break down and precious metals entered long secular bull runs. In today's world, Treasury yields are spiking and the U.S. has lost its last AAA credit rating from Moody's, and Jamie Dimon of J.P. Morgan just called today's credit markets a bad risk, citing inflation and geopolitical shocks. And while gold has already made its breakout lately, including against the S&P 500 and even the 60-40 portfolio, silver has lagged. But that's typical, says Roy Byrne. Historically, silver has played catch-up later in the cycle, but when it runs, it outruns everything. Well, he's not alone. Goldman Sachs recently raised its target for gold to $3,700, with others floating $4,000 plus in the coming years. While this video is focused on silver, that kind of bullish sentiment for gold often foreshadows movement in silver as well, especially since the two metals are historically correlated. And despite all the buzz, Roy Byrne says sentiment is not overheated. In fact, managed money positions in gold futures are down 40% from the start of the year, which means the market has already flushed out a lot of speculation. And yet silver continues to hover near $33, solid footing considering. Even ETF flows have been lackluster. Assets in major funds like SLV have not approached 2020 highs, a sign that institutions haven't even piled in yet. Translation: the retail crowd may be early, and unlike ETFs, which can underperform during real-world spikes due to management fees and lack of physical redemption, silver in hand, or secured in a vault, remains just that, silver. That's why some analysts are nudging people towards thinking bigger. When confidence in credit erodes, people tend to look for something, well, less printable. And if physical silver is your vehicle of choice, now might be the best time to at least learn the options. So don't forget, if you're curious what that looks like, check out the free gold and silver kit below. You'll get the physical and digital version plus audio and video breakdowns. And again, if you act fast, you could qualify for up to a 10% instant match in bonus silver and a free Ronald Reagan half-ounce silver coin. First come, first served. Silver's breakout has not happened yet, but the chart is tightening, and if it clears $35 and then $37 and then $50, well, according to Roy Byrne, that could trigger a move to $95 or even $100 in 12 to 15 months. Will it happen? Time will tell, but if it does, you'll want to say you were ahead of it. Subscribe if you want more data-driven breakdowns just like this, and keep stacking smart.